Hey guys, welcome back to another broadcast. Sorry, I'm just a few seconds late. I got on here. I had on this green striped shirt, and the stripes go this way, and it was just freaking out the camera. It was like doing this. I was like, man, that's making me dizzy. I got to go change shirts. So anyway, sorry about that, but it is what it is. So tonight we are going to look at my portfolio. I thought, it's been a while since I've done that. Thought I would share that with you. Maybe we can talk about, some thoughts I'm having about a couple of stocks and maybe get your feedback on that. So let's see who all's on the broadcast here before we kind of go too far off the rails. We got ex-dividend dad. He says, oh man, 9 and not 8. He's trying to keep bad jokes off his stream. Well, I think, correct me if I'm wrong, ex-dividend dad, but you might live in a place that does not observe daylight savings time. So it is still 8 o'clock for me, but I think now you're on Eastern time, and I'm on Central time, but it's we do have that daylight savings time. So it's still 8 o'clock for me. It's an hour different, but it's it is what it is, Sorry about that, dude. It's going to be a rough night for you, I can tell. So we got Pat here. He's hoping he can stay awake that long. And also, he is calling from sunny Florida. It sounds like, Pat, it is that time of the year for you to get down there and enjoy at least some weather that is not frigid up there in the Michigan land. So, I'm glad to hear you're in Florida. I've been to Florida a few times, and there's some really nice places there in Florida. So I'm hoping you're having a great time and that you've got some great internet, because I know a couple of years ago that was an issue for you, but looks like you're doing great, my friend. Glad to have you on the program. Yeah, the daily time zone change got to me more than anything else. Daily time zone change. Maybe the I gotcha. All right, Michael Swami's in the house. Good to see you, my friend. Let me see who. Oh, Eli. Eli is here. Good. I'm glad you like that. I was going to ask you guys some feedback on that series that I've started. I'm basically going through my portfolio. Good thing about not having 100 stocks in the portfolio, that you get to kind of go through every now and then and just rethink everything. If I did not own this stock today, would I own it now? And there's going to be some questions, some serious questions I have to ask myself on some very good stocks. So we'll just have to see how that goes. We got Brad Durfee in the house. Hello, my friend. Hassan is here. Cool videos. Hey, great. Yeah, I'm glad you like that Intuit video. It's I think they've got a really interesting and a unique strategy. They're trying to pull together this data plus AI plus HI, and doing that not for the entire world, but for consumers, small and medium-sized businesses. I think that's a great niche for them, and if they can pull that off, it's going to be really cool. But if they can't, it's not going to end well for us. So I guess that's part of the risk of investing, right? So I'm glad you liked that video, my friend. You can't confuse Swami with Pat now. That would not be good. It must be getting late for you, ex-dividend dad. Yeah, that's what I was thinking. You go Eastern to Central and back to Eastern. Yeah, that kind of stinks. Got some relatives up by you, and I remember, and actually I used to live in that state, and we used to not observe Central or daylight savings time either. So Eli's got a question here. Do you think it's a buy? I'm 26, looking for some long-term compounders. I really do, Eli. I think it's a buy. I've added some to my portfolio. we'll talk about how much I have here in a little bit. And I am looking to add a little bit more to it. It didn't move a lot today. And it's roughly around where I bought it, a couple of months ago. It's when I started buying it. So I think it's going to be a good long-term compounder. Again, this depends on their execution of the strategy. But, what I would encourage you to do is go and listen to at least the strategy part of their Investor Day conference. It's on YouTube. They had that maybe a month or two ago. It's really enlightening, really insightful. Sometimes it gets a little over my head, but I think I understand where they're going, and I like the way that they're kind of marrying up Credit Karma with QuickBooks, with MailChimp, and I think I'm leaving one out, but I can't remember. But trying to put that suite of products together as far as a front end, mid end, and a back end for small and mid-sized businesses. I think if they can pull that off, it's going to be something really, really special. So, but it's one that we just have to hold on to for a while and see how they do. But they have certainly shown us that they can grow their earnings, they can grow their profitability, margins, everything. They've done that for the last 15 years. So I think we can trust them. At least that's my perspective on it. How often do I review my portfolio? New internet this year, last speed test, 900 plus. Man, that's great. You should start a YouTube channel, Pat. That's some pretty good speed. Yeah, so how often do I review it? Really just whenever I feel like it. It's not like I have this clock that goes off or, set a timer and say, okay, ding, it's time to review the portfolio. But usually once a year, I will go through. As a matter of fact, ex-dividend dad and I get together usually once or twice a year to go through each other's portfolio and give feedback. And we just kind of set a Zoom call and, present what we're doing and why we're doing it, and kind of go at it like that. But, before we do that, obviously it's time to kind of reassess everything. And, we're not reassessing on the call. We're saying, hey, we have reassessed and here's what we're trying to do. So I would say about once a year, Pat, is what I do. I try not to make a lot of transactions in my portfolio. I like to set my strategy and let the stocks and management teams have a chance to develop. It's kind of like the Pittsburgh Steelers. Now, I'm not a fan of the Pittsburgh Steelers, but my sister is. But if you look back at the so we used to live between right in the middle between Cleveland, Ohio, and Pittsburgh, Pennsylvania. So you had half of the city that we lived in were Cleveland Browns fans, half were Pittsburgh Steelers fans. So the comparison I'm trying to draw here is that the Pittsburgh Steelers probably have had like 4 or 5 coaches in their whole existence, 50 years or however long they've been around. And the Cleveland Browns have been back in Cleveland since 1999 and have probably had 25 coaches in that time frame. It is just really nuts. So I try not to switch out my stocks too much. I like to let them gel. I like to let them, kind of be a part of the portfolio and contribute, give them a chance. And so I try not to make a lot of transactions. So once a year, I think it's plenty for me, Pat. That's just my perspective. Hey, Billy, good to see you, buddy. Hope you're having a good breakfast this morning over in the Philippines. That's great. Is it on their channel? Yes. Well, I don't know if it's on their channel. I would say the way I found it was I went to their website, go into webcasts and presentations. It'll be prominently there, the 2025 Investor Day. You can click on there, and then it'll give you can look at the whole thing. It'll say, you want to watch the whole thing, and it's like 3 or 4 hours, so I wouldn't do that. But then it has it broken up in pieces. And the one on strategy is the one that I would suggest. So that's the way I got to it, Eli. Hopefully that will help. Yeah, yeah. Uh, Meta, I think is it certainly has gone down in price, and if you're a fan of Meta, I think now's not a bad time to buy that. So, but I don't own it. I don't follow it. I don't track it. I do have Facebook and Instagram, but I don't really do much uh, with the stock itself. This doesn't interest me. I guess I don't know. Maybe I should. What do you guys think? Should I? Fast Eddie in the house. Good to see you, man. Looks like the last vote is underway for reopening the government. I wonder if this is really going to make the market go up, pay what it is. Yeah, I don't know. I mean, I struggle with this whole government shutdown thing because at the end of the day, it really doesn't do anything. I mean, they're going to go back and back pay to all the people. And so at the end of the day, all it is just noise, you know? So yeah, any kind of dip that there is, I mean, I think we could take advantage of it, but I think the dips are so small, it doesn't really move the needle a lot. So I don't time my buys off of the government shutdown. Although, I mean, today the market went up pretty nicely. So maybe I think we've already seen the majority of what we're going to get. But, maybe we'll get this same thing again. But I think maybe at least half of it is priced in now. I think there's a pretty good confidence that they're going to open this government back up. Rob Berger has a blue binder for his wife in case something happens to him. Do you have anything like that for your wife? God forbid anything happened to you. Yeah, that's a great question, Fast Eddie. And the answer is yes, I do. It's what I call it the legacy binder. A legacy folder is what I have. It's more of an accordion kind of thing that has a lid, that kind of flips over. So it's not like a binder. And then we've recently added an estate plan to the family. What do you call this? The family documents, I guess, and that has a revocable living trust and all of that stuff. So all of that stuff, the trust is in a binder in the safe, and along with that is an accordion file of things like, car insurance, car tags, anything that in home insurance, anything that would be helpful for someone coming along after me, that's in the safe, in that accordion file. And that's one thing I do need to probably update, but it's been in there. It's been there for a while. And I have updated it periodically, but I've had that in place probably 10 years now. And it gives great peace of mind. And it's a great way to tell your family, and not necessarily to tell them, but to show them that you appreciate them. Because, it's got to be a rough time when somebody passes away, and, you got to deal with all that stuff, and you don't know what bank accounts they have, what credit cards they have, what debt they have, where their assets are. You just don't know where all that stuff is. And just having that in one place and organized is a great thing for the family. Great question, Fast Eddie. Man, you are really on your game tonight, my friend. That's good. We need more questions like that. So let me ask you guys this. Do you guys have something like that you have prepared for your spouse, or if you're not married, for some other person, whether it's parents, siblings, whatever, that they can go to in case something happens? I think this is it's a morbid question, but it is a really good question to ask. Past. Oh, I got you. Go up past what it is. Yeah, I don't know that it's going to really go up that much, ex-dividend dad. I'm not expecting it, but we'll see. Pat says the futures are flat right now. So if you, I do watch the futures, but it is really interesting sometimes how different the future, the market actually turns out when it opens up than what the futures really are. But I mean, it kind of gives you a sense for where things are moving. So Redweld folder, he's old school. There you go. Good job, Michael. Glad to hear you got one as well. So Billy, you call it the family jewels, huh? Yeah, I don't know about that, but it is in the same safe with all of my coin collection, my gun collection, and I don't know what other kind of collections I got in there, but those are the main things. So this silver and gold going up has been really good for the items in my safe. So glad to hear that. So, hey, before we go too much further, let's get started with the portfolio. I think it's going to be really fun to kind of walk through this. Not exactly sure where it's going to lead us, but we'll just see. Well, let's just take it and see what happens. All right, so for those of you who haven't seen this before, this is the spreadsheet. It's an Excel spreadsheet that I built strictly because I couldn't find the information in some of these apps that track your portfolio that I wanted to have. So it keeps getting bigger and bigger. This what I call the dashboard. It's getting more like a detailed board, but it kind of gives some flavor. You can see the portfolio actually went back up over 1.8 million today, so that's good. It had dropped below that with this last drop, but I will tell you, take a look at this, man. This year, the portfolio has grown. Maybe I can make this bigger. No, I can't. It'll make it squirrely. There we go. The portfolio has grown $283,000 this year. That's about 17.3%. It went up another. I don't think that includes today. No, it doesn't. So it's going to be about 18.5% on a year-to-date basis. The 283 includes today, but the percentage doesn't. It's one thing I have to manually update. There we go, 18.44% year to date through today. So I couldn't be any more happy with where the portfolio is at. Is there anything else cool on here before we actually get to? You can see that I have 23 holdings in the portfolio. I don't want to have any more than 25. And these are the winners and the losers for today. You can see that, man, Google went up like 4% today. I will always call it Google. I know it's Alphabet, but I will always call it Google. Amphenol went up another 3.4%. It's one of those stocks that I go, man, where is the end to this? And it just never ends. It's kind of like Parker Hannifin. It just never ends. Cormetics is up 3% today. I want to ask you guys a question about that a little bit later. So we had some good moves today, but we also had some dogs. Look at Elevance Health was down 4.4%. I had Lockheed, Northrop. Both of those are defense stocks. We're down a little over 1%. Hershey's down. United Health's down. Hess was down. So we had some offsets to some of these really stellar gains. And overall, I think this is a little rounding difference between the brokerage, but I think the brokerage says 1.05%, but this says 1.06% on the day. So I will take that. You know, that's better than a sharp stick in the eye. Okay, let's get to the portfolio. I think the best place to look at that is here. Now, this one I can make bigger for you guys. And I thought what we would do as you guys, let me share this. Here we go. I'm not going to go through those. So as you guys know, and you just saw that, that's not what I was after. This is what I'm looking for right here. As you guys know, I'm kind of like what I like to call an entrepreneurial investor. I like to invest in the business. I don't really pay a lot of attention to sentiment and, you know, market trends and timing and all that kind of stuff. I'm looking for businesses at least a fair value or even below fair value. That's kind of what I look for. I want to know the business, know the financials, know the management team's capabilities, and know the investment thesis. And I tend to gravitate toward one of three. And usually there's a bit of each of these, but there's always one that's predominant. One is whether it's a value investment. That means that the price of the stock is much lower than the intrinsic value. Also, there's an income investment where it's like an above market dividend yield, and then a growth investment. And you'll hear a lot of people say that dividend stocks are not growth stocks, and that is completely false. If you hear somebody say that, run from them, because you can get both growth and non-growth in the dividend sector. So I like dividend stocks because the dividend, and there are companies that are growing like crazy, but also paying a dividend. Take Amphenol, for example. Take Google, for example, is a growing stock, but they do pay a dividend. Microsoft is a growing stock. We'll go through some of those. And I'm probably getting on a soapbox here, but one of the things I like about dividend stocks is that dividend decision by the board and by the management team about what they're going to do to raise their dividend has vision into what they believe the future of the company is. So if they're looking at their financial forecasts and they're saying, well, we're going to grow at a clip of about 5% a year, 10% a year, whatever the number is, then they believe that regardless of what earnings are doing in the current year, they can continue a certain level of growth. And so if a company is growing the dividend, they're looking into the future. You're getting some insight into the company that you would not get for a non-dividend paying stock. You would have to do a lot of guessing on that. I'm too old to guess. So anyway, know your thesis, invest with conviction. I like that. All right, so that's that for that. Let's go back to the portfolio. The reason I shared that is I'm going to separate. I've already separated these into the categories. So we're going to look at the growth-related stocks first, income second, and value third. So let's take a look. We have here Microsoft. So Microsoft is my largest investment in the growth category. It's 6.18% of the portfolio. I like Microsoft. I've invested in them for quite a while. They've grown. You can see here on the right, they've grown by about 55% in the portfolio. So that's not too bad. I like their exposure to OpenAI. I think it's going to provide, and just their margins, just their growth and cash flow, the decisions they make as a company on where to invest and how to grow that business. I like Microsoft. Am I buying any more? No, because 6% of the portfolio. It's a pretty big number. So, all right, second is Amphenol. Amphenol is 5.59% of the portfolio. I started investing in that back in January of this year, of 2025. It is up 118%, which is like lightning speed. Just happened to, come across this stock, did some research on it. And I was like, dude, this is a great stock. So I started buying it, and then it, I got to like a 2.5%. And I was like, no, this is really going to move. So I was able to kind of get more shares of that, and then it has organically just grown above really what my thresholds are. So, but I'm not selling it. It's it just continues to grow. Parker Hannifin is 3.5% of the portfolio. It has grown 157%. I don't remember exactly when I started investing in it. It's probably been 2.5 years ago, but it is double in the portfolio, 2.5 times. SOX, which is a iShares semiconductor ETF, is 3.38% of the portfolio. It has grown 73%. I've been investing in that for probably 4 years or so now. And I picked SOX. I think SOXQ has a better expense ratio. One of these days I'll switch that out, but it's not hurting me too bad right now. But either one of those, I did not know which semiconductor stock to pick, so I picked the ETF to get a little exposure to everything. All right. Atmos Energy is 3.07%. I consider it a growth stock, even though it's a utility. And I'm going to do videos on all of these, so I will kind of leave the details a little sparse in here. But it is a stock that just continually grows. Its rate base grows. It has a good relationship with the regulators. And so it has grown in the portfolio almost 80%. So for a boring utility, that's some pretty good growth. RTX, this is one that I think ex-dividend dad and I invested in together. It's over double now. It's 110% growth in the portfolio. So that's been probably 2 years ago, maybe, that we did that. Now, Carlisle is new to the portfolio. It's down about 7%. It's about 2.5% of the portfolio. So it's normal weight for the portfolio. I would like to add more to this. I'm not sure if now's the right time, but Carlisle's a great industrial company. Johnson & Johnson is a slow grower, but it is a grower. It is a very consistent grower. It is a 4 to 5% per year. Take it to the bank. That's how much they're going to grow. Visa is a grower. It's 2.23% of the portfolio. It's also about a 25% return. Then we come down to General Dynamics, who's a defense contractor. It's 2% of the portfolio. They're up about 77% overall. Lockheed Martin is up about 28%. Then we come to the video I just put out on Intuit. I just started buying this maybe a month or two ago. It is down 0.1% in the portfolio. So it's basically where I bought it at. It's 1.8% of the portfolio. I will likely buy more of this to get it at least to the 2.5%, which is where I like to have like the normal weighting of a stock. Northrop Grumman is up 15% in the portfolio. I would like to add to this one. I'm just not ready to do it yet at these prices. EOG, I've owned EOG for quite a while, probably since 2021. So was that 4 years ago? They are 1.36% of the portfolio, 19%. I have them rated as a growth stock. They really have not done much in the last 2 years. So that's one that, when I get to this in the portfolio review that I'm doing, that's going to be a question I have to ask myself. Is this something I would buy today? And if not, why do I still hold on to it? No, and I'm not saying the EOG is a bad company. I think they're a great company. It's just that, the environment that we're in right now may not be the best environment for them. Hess Midstream is 6.5% growth. It's 2.8% of the portfolio. It's an income stock. It's I think its dividend yield is somewhere around like 8% or so, 8.5 maybe now. So that's good. I have a U.S. Bancorp as an income play. So that's, I think they're around the 5% dividend yield. And T. Rowe Price also around 5%. It's about 1% of the portfolio. And those, I forgot to say, U.S. Bancorp is up about 35%. And T. Rowe Price is up about 19% in the portfolio. Now, I have about 1/3 of the portfolio invested in, I'm going to move this up, invested in VU, which is the S&P 500. And it's up about 55% from where I bought it. So that's a good thing. Then I have Google. Believe it or not, I have Google, 5.3%. It's one of my larger holdings. So 5.31. So it is actually my number 3 holding outside of VU. It's the number 3 individual stock in the portfolio. It is up 83%. So lovely. I love having that. I have it rated as a value stock because when I started buying it, it was not for growth. It was because it was, in my opinion, highly undervalued. And lo and behold, it came back actually pretty quick. I've only been in it for maybe a year and a half, something like that. Now then I've got some real dogs here. I've got United Health Group, Hershey, and Elevance Health. All three of those, I'm down 19% on United Health, 8% on Hershey, and 22% on Elevance Health. So, I got to do some thinking on those. I think United Health and Elevance, there's a lot going on in the environment, in politics today. I really need to get my arms around that. So I'm looking forward to doing some more research on those. I'll let you know kind of where I'm headed on that. And then my latest craze is Cormetics, which is a non-dividend paying company. It's the only non-dividend payer that I have. I believe it is a value stock because I think the intrinsic value is probably more like $20 a share. I did just a rough discounted cash flow calculation on my own and came out with somewhere between $20 and $23. So I'm using that $20 range to say that's the fair value. It's trading somewhere around $11 or so these days, and so it's up about 0.7% in the portfolio. So here's the question. I am considering. I need to do a little more work, but I'm considering trading the Elevance Health for Cormetics. They're both in the same sector, right? So I've got 1.7% of the portfolio in Elevance Health, 1.1 in Cormetics. What do you guys think about that? Is that crazy? One of the things I like about this group is we're not afraid to help each other out. So help a brother out there and let me know. So that's basically the portfolio. You can see that all of these stocks add up to 93.15% of the portfolio. So you say, hey, where's the other 7% of the portfolio? And here it is. It is sitting in cash, $123,000 sitting in cash. That will, I have actually, I did that on purpose. And it's not because I'm trying to time the market. I have some major expenditures personally coming up. We're going to be paying off one of our real estate holdings. We've got year-end giving to do, Christmas, stuff like that. So I have pulled I'm going to need about 110,000, I think, to take care of all that and also pay the taxes off the money that I pull out. So it's kind of I'm not going to keep that cash forever, but that cash is probably not going to be invested. It will be invested, but it'll be invested in real estate mainly, and then giving. So that's it. I think that's the whole thing. That's the whole portfolio. I don't think there's anything else cool. So let me come back to you guys and see what's happening. What you guys talking about? So Michael says this is back to our folder for our families. Easier to let the family know what you have than to let them try to figure it out after you're not around to guide. I agree 100% with that. And I've actually gone to the place where I've taken especially the revocable living trust. And I've gone through that with all of our kids and my spouse so that everybody knows what's going on. Everybody understands how the assets are structured, the LLCs, the investment accounts, who their beneficiaries are. They know all of that. And I think that's a good thing. There is nothing that I'm hiding or holding out from them. I think that is a good thing to do. I think it's prudent to do that. And now this is not the case with me because I think all of my kids can handle all of that. But if you've got somebody that you're going to give more to one than another, it would be better for them to hear that from you. than to hear that for the first time when a lawyer reads the document. So I think that conversation should be had if that's your case. And I don't know if that is or not. It's not my case, but that would just be the way that I think would make sense. So ex-dividend dad, my wife and I are going to get a will next year. I would ask you to speed that up a little bit. And, especially with young kids, I think it's really important for you to kind of let your wishes be known. But yeah, I would certainly agree with you that you need a will. I would just, and I know we're in November here, but man, I would do that as a Christmas present. That's what I would do. I have a brand new shovel in the garage in case my wife gets out of line. Yeah, so I think Fast Eddie, what she's going to use that for is to dig your grave out in the flower bed, and then I think she's going to put some of those flowers that are endangered so that nobody can dig them up, and so nobody will ever find you. You'll be underneath those endangered flowers, man. I'm just joking. I own 2 private companies. They need to understand. Yeah, that's good. Set up voting trusts and income trusts for each. Keeps the number of voices at board meetings under control. Yeah, that is great, man. I'm glad to hear that. I like that approach too, where you have voting trusts and income trusts. So you probably got people who have better business minds than others as well. So not only does it keep the voices under control, but you can pick the ones that you think are going to be the most valuable to the business. So that's cool. Yeah, Atmos is a natural gas utility in a part of the country that is rapidly growing. Yeah, that is great. And I'm just taking advantage of that. It's kind of like Pinnacle West, although Pinnacle West was more of a value play. Because it had been beaten down in Arizona because they had gotten a utility commission out there that had just lost their minds. They had taken Pinnacle West, which is a utility in one of the fastest growing areas in the country, and they gave them the lowest, almost one of the lowest rate of returns in the entire country. And I was like, this ain't gonna last. So I actually a couple of years ago started buying Pinnacle West. Maybe it's longer ago than that, 3 years ago. And then lo and behold, they got a new utility commission, brought their rate of return back in line, and increased their earnings. And I sold out. So I don't have the only. I'm trying to think. I think Atmos is the only utility that I have at this point. So I don't have any. This will probably freak you guys out because I'm retired, right? I have one utility. I don't have any business development companies. I don't have any REITs in my portfolio. Used to, but I got rid of them all. Yeah, no, I agree. I'm just I was kind of being tongue in cheek there with about since my career was in the utility industry, and I know yours is too, Michael. It's I got told that so many times that the utility industry is just boring and stodgy, and really any of it is nothing like that. There's a lot that's going on there, and it takes some brain power to kind of work in that environment. So I certainly appreciate what you bring to the table there. Visa is an okay price. Yeah, let me see. Let me see where I have. Here, I'll expand this. Let me bring you guys in here with me. So this is the portfolio tool that I have, and not only does it tell me what my portfolio is, I have in here the stocks that I own plus a watch list. I'm going to go ahead and open all of that up. And I don't think I've got anything else. Yeah, it's pretty small, isn't it? Yeah, I think we're good. So I'm going to sort this in descending order. This tells me, at least according to my research and the numbers that I look at, which stocks are most attractive for me to buy with my next dollar. So if I have my next dollar, Cormetics is pretty high up on the list, and to be honest with you, Elevance Health is up here too. Um, but it doesn't mean that any of these are buys. It just means that the numbers tell me that they are attractive. And if the numbers tell me they're attractive, then I got to make sure that just from a judgmental perspective, looking at their strategy, looking at the environment, political environment, are they good investments? So anyway, I don't know where I was going with that, but so Cormetics is like at the top. So I think where I was going is to try to find Visa, trying to see where Visa is. There it is. It's actually number 50 on the list. I track 131, I think, of these companies, and it is not a bad investment at all. I think, based on my research, that you're looking at maybe a 12% return over the next year. And the average analysts, if you take all the analysts and average them out, they say that Visa is going to be a 19% returner. So, I mean, who wouldn't want that, right? So whether there's other stocks that are better or not doesn't really matter. That seems to be a pretty decent investment. So I agree with you, Hassan. I think Visa's at an okay price. So. Well, directive to physicians living will. Oh, will. Yeah, there you go. I was thinking that was going to be a question. Will something happen? But a will, and yeah, physicians, the living will. There's also power of attorney, and some other kind of medical thing. I forget what it is, but yeah, we've got all of those in place along with our revocable living trust. So I think we're good to go. The only thing I have is a bank account in a state that we used to live in, and we just have not been there to get it transferred or get it to allocated. What's the right word? Funded into the trust. So that's the only asset right now that's not where it needs to be. Oh, there we go. Medical and financial power of attorneys. Yeah, I agree. Yeah, so all four of those things. So just to kind of give a little bit more detail, we have a revocable living trust. We have medical and financial power of attorneys. We have the living will, and we also have a will, and it's called a pour-over will. So if anything happens to not get into the revocable living trust, then the pour-over will comes into play, and it pours anything that we didn't put in, it pours it into the trust. The downside to that is that anything that goes through the will has to be probated. But the beautiful thing about a revocable living trust is that it does not pass through probate. So your relatives, your beneficiaries get to manage the assets and take advantage of those pretty much right away. So, but I'm not an attorney. I'm just telling you what I've done, for our family. So there's some good stuff out there. Yeah, that's right. Fast Eddie. You'll be laughing when you're underneath those flowers. All right. Gotcha. Yeah, I don't know. I know there's all these do-it-yourself things online. I tend to not trust them, and I'm sure they're fine. I just don't trust them. I went to an attorney, and I picked a sharp attorney. He really knows what he's doing, and the way I know that they know what they're doing is that as we go through the process, they educate me on what we're doing and why we're doing it. And they give me choices. They'll say, you can go this route or this route. Here's the benefits of doing this. Here's the benefits of doing this. I get to choose, but at the same time, I get to learn a lot. And so that's always good. That's what I like. So, All right. So where are we at? We got about 15 minutes left. Are there any stocks that you guys care to look at? Yeah, that's right, Michael. If you have any substantial assets, use an attorney. I would totally agree with that. That's what I did. All right. So I'm trying to think there's anything else that would be cool to walk you guys through. We could do the news. You guys want to do the news from Simply Safe? So let's take a look at this. Before we do that, let's take a look at this from Hassan. It is TGLS. There we go. Now I'll go ahead and pull you guys into this. TGLS. You know, one thing too that with my spreadsheet now, I use Simply Safe Dividends a lot. I use Morningstar a lot. I used to use Fast Graphs a lot, but I don't use it that much anymore. So I'm wondering if I still need to pay for it or not. Technoglass, TGLS. Yeah, they were down 5.7 today. Looks like they're undervalued, according to Fast Graphs. Yeah. And they have taken a dip. I would need to understand what's causing that. Let's see what TGLS. Let's take a look at some of their financials. They pay a 1.28% dividend yield, even though stock prices dropped dramatically. Wow, they grew the dividend by 43% the last time. When was the last time they did it? Oh, it looks like it was January of 2025. So let's take a look at some of the financials. The earnings payout ratio looks fantastic, 15%. That is not too shabby. Looks like sales or earnings have kind of flattened out here. That'd be worth keeping an eye on. Yeah, see, the earnings per share growth over the next 12 months is 0%. Shares outstanding pretty flat. Return on invested capital is pretty nice at 22%. Net debt to capital is it's actually zero. So they probably do have some debt. They've got an interest coverage ratio of 68, which is fabulous. So they are certainly in good shape financially. I would want to understand more. I've never heard of this company, actually. It manufactures, supplies, and installs architectural glass, windows, and associated aluminum and vinyl products for commercial and residential constructions in Colombia, the United States, Panama, and internationally. So I would want to understand what percentage of the business is Colombia. They are based in Colombia. So I would want to understand about that a little bit more. I tend to invest in U.S.-based companies, mainly because I hate dealing with the taxes on dividends from foreign companies. So it's not that it's a big deal. I just, if you got a whole bunch of little deals in your life, if you can get rid of a few of those, why not do it? That's kind of. Oh, Hassan here says 95% of the sales are in the U.S. Okay. Well, and that kind of makes sense, right? Because that's where a lot of the consumption happens actually in the world is in the U.S. So that would make a lot of sense. But yeah, I would want to understand a little bit more about that. So it is a qualified dividend. But yeah, let's see if I don't know if Morningstar would cover them or not. TGLS. Not YGLS. TGLS. Technoglass. No, they don't. They say it's 5 stars, so it is highly undervalued according to Morningstar. 55.46. Doesn't look highly undervalued to me. I mean, you can even see. Let me make this bigger. You can see where that dotted line is. That typically is where the stock price is. That would mean it's a 4-star company, close to 3 stars, yet they have it rated as 5-star. And I don't understand why that is. Only a 15% discount. There's no way that's a 5-star. Maybe they just haven't updated the model. I don't know. Let's see. Let me shrink this down a little bit. I know it works for you guys, but it is huge in my screen. Let's see. View full chart. Let me see what this stock has done. Over the last, let's say, 5 years. Yeah, it has dropped pretty significantly. It was in the $85 range, and now it's in the $46 range this year. So it has come down dramatically. So the way I would look at this, Hassan, is what is the investment thesis? It's certainly not income, right? Is it growth? Do you think the company's going to grow? Is that really where the investment thesis is? Or do you think the market has it wrong? Do you think that the market is valuing this stock incorrectly so that they are actually intrinsically worth more than what the market has them valued at? So if you believe that, then for you, it would then become a value investment. And you would expect that over time, and it may not be 1 year, it might be 2, 3, 4 years, but over some period of time, things will happen that will cause the market to understand that they have made a mistake, and that investment will recover. If it's just cheaper than it used to be, that doesn't mean it's undervalued. It might mean that it was overvalued before. So you really have to understand what it is, what you believe the intrinsic value of the company is. So if you're looking at it from a value perspective, make sure that you understand what the intrinsic value is. If you're looking at it for growth, then it's there you go. Yeah, Michael's wondering if there's a currency issue. That could be. I don't know. It's Colombia. I don't even know what the currency is for Colombia. Not that it matters, but I know that when we went to Vienna and Greece here a couple of months ago, the dollar was their currency was stronger than ours. So I don't know. That's a good question. Hassan thinks they're going to grow. They expect double-digit growth. They're good. Yeah, that's pretty solid. They're expanding more in the U.S. That's good to hear. Oh, Hassan lives in where the company is headquartered, so that's great. So welcome, man. So you're not the only person from outside the U.S. that watches this channel, but it's always good to have folks with different perspectives, and so I'm glad you're here, man. So guys, I'm going to cut this off a little bit. Oh, we didn't watch the news. Let's go real quick to the news. Latest, it's November the 10th. So let's go back to the 6th. Oh, let's pick up this one. Atmos hikes dividend by 15%. Look at that. ATO, 15%, reaching a 42nd consecutive annual increase. BDX, I don't know. Ups dividend by 1%. I don't know if that's knocking the doors off anything, but if that's, who is that? Oh, Becton Dixon and Company, healthcare equipment. So if that's something that you have or are interested in. ConocoPhillips boosts by 7.7%, reaching the 9th year of consecutive payout growth. That's good to hear. Sun Life raises the payout by 4.5%, which resulted in 9.5% over the past year, meaning that they've grown it other times throughout this past year. So that's good. Evergy is a utility that I had begun to look at. They just look too much like all the other utilities for me to really pull the trigger on, but they grew the dividend by 4.1% for the 21st consecutive year of payouts. It's pretty bad when you say it's a utility that looks just like every other utility, and there's some truth to that. C.H. Robinson increased the dividend by 1.6%. A lot of dividend increases at this point. Snap-on hikes by 14%, marking the 16th straight year of increases. DuPont resets dividend by 51%. Yikes. DuPont Specialty Chemicals dropped the dividend from 41% or 41 cents per share down to 20 cents per share. But you know, it landed them a reasonable or a borderline dividend safety score. But anyway, they cut it in half. Yikes. Barrick hikes it by 25%. That's in the gold area, so that's not a big shocker. And then Tyson, I think some of my friends have Tyson. They raised the dividend by 2%, and that's it. That's pretty much it for the news. So, guys, it is a couple of minutes early, but I'm going to go ahead and get off of here and go see what's going on in the football game. I hope you guys have a great week of investing. I am planning to do more videos looking strictly at certain companies as I kind of walk through my portfolio. I'll share those with you as it happens. I'm also considering doing like a weekly, very short portfolio update just to say, what did the portfolio do for the week? Is there anything, that is worthwhile in the portfolio? So anyway, if you guys are interested in that, let me know. And it's wintertime here, so I got chickens that we're going to be processing this Saturday, and then after that, I mean, the bees will be asleep. There won't be much happening in the chicken world, so I'll probably be looking at you guys for some camaraderie here. So anyway, with that, I want to let you guys go. I will see you on the next one. Take care, guys.